I don't know what's going on, but every time Bitcoin pops, a wave of crypto optimists are shouting out, claiming that they will exchange their old used car to Lamborghini. I don't know whether it's a Lamborghini and Bitcoin related ad campaign, but something is in the air. Today, as Bitcoin yesterday dropped, however, we will find out whether this trend is sustainable and what can we expect from the future. I'm very glad to host you today. Today we will go through also through a stock market indexes and some commodities alongside. So I invite you for another dose of news from Blockrevision and space. Let's head into the first section. All right, and that's economy view. So at first, let's find out what's up in the economy. And for this one, I want you to switch to this panel. At first, let's find out U.S. economy keeps charging ahead, putting pressure on the Fed to hike. So previously, we've seen that those vibes around that the stock market will be only rising are already starting to fade. And market is trying to discount eventually the possibility of a postponed Fed interest rate cuts. So for us, for investors, it means that the more cautious will be necessary to keep up with what's going on the market. And right now, we need to have have in the back of our head this red flag that Fed may stand up and tell that the market conditions has changed, and right now the hiking interest rates maybe even more fierce. Recently, we've seen this U.S. retail sales rebound at the start of the year, and that's something that really sparks some doubts that this CPI inflation gauge may remain untouched. So that was about the element that Fed maybe is not looking at as the dominant in their policy shaping, but something that we need to consider, and that's indirectly correlated with their decisions. So it was about it, and also Mr. Williams, that was and this is typically a more neutral Fed speak member, not really Dolph neither Hawk, claiming that Fed will be staying the course to get inflation to go, and he doesn't count out the next hikes. So that was about it. Also, we can find out that the situation on the housing market has improved. If we just get to this week, we will find out what's right here. NHB Housing Market Index, that's at 42. Sorry, it means we are V-shaping. And right now trying to negate this very very severe slump. And will it happen right now with such high inflation and also credit that's been that advanced? It will be much more difficult to get to that levels, but 60s might be on the horizon, and right from there we'll find out what's next. So the positivity in the economy is right now uh, possibly heading into better direction than sentiment around the stock market, where those uh, um, upbeat modes has been extinguished by recent economy data. What about next? Let's find out what I have for you. For this one, I want you to find out at market outlook, and for this one to happen, let's switch over to some of the charts. And right now, TNX is still rising, so it means that there's the environment favoring the dollar. So as a whole, it means that the risky assets might be going through some lean time. So it was TNX. Let's find out what the broad market is telling us. So RSP is the Invesco S&P 500 equal weight ETF, and right now it maybe performs nice, but look at the RSI. That's a very important indicator right here. We have aligned this resistance at build up at April of 2022. I will maybe just attach the horizontal line, and we've touched this, but has rejected very fiercely. Just look at the RSI. So on RSI chart, we can find that this spike has confluenced with a strong rejection on S&P equal weight ETF, and caused a drop of around 3.54%. So it means that this equal weight ETF, that's a one of the benchmark of the total strength of the S&P, is right now finding some difficulties in getting across this barrier. So I would rather wait for this to happen. Around 155 what the price action might be. But right now, as RSI has finding its difficulties right here, as we can find the very strong spikes that are rejected right now, pointing that we might be in the um, in the way to make a correction. So it was that. However, SPX, what's telling us this exactly? This exactly index is that right now, as well as here and there, those RSI is not really very optimistic for further growth. So a type of a correction might be somewhat expected. Right now, heading back to our slides, I will jump over to the next, and we'll backtrack right after. So there's a widening gap between the Dow and S&P, and that's the biggest gap between Dow and S&P 500 since 1934. So usually it means that one of the asset, whether it's Dow or S&P, will try to catch up with that difference and build up tighter confluence. So right now it's this way or another. If we just move into S&P, it would mean DJI will have another spike upwards. But if we just downgrade and the S&P will catch up to DJI, it would mean that it will be more likely to drop for indexes. So after that strong uh, months, or rather first weeks, we may remember that February is usually much less favoring for bulls than January, and it would mean that the second half of the month might be a correction phase. We'll get back to this slide. What about the bold bed I've attached? So haven't I switched? Yes. So that was the Dow that has posted the worst start to a year since 1934, next to the S&P, and right here we have another element that's right now is playing trying to play it out on the market. So a talk of a 50 basis point rate rise is pushing USD shortened yields higher and taking the dollar along for the ride. So usually when it's a price contraction like here, when the volume is rising and some type of uh, low time short low time frame price differences are visible, it's a very often a harbinger of an upcoming move. So the volume has dropped to that extent that it was more likely to expect that it will eventually rise again. So strong US cyclical inflation data have investors finally coming around to the idea that Fed is correct and that rates will have to go significantly higher in order to tame inflation. By far, investors been neglecting the eventuality of further or stronger hikes. Looks like investors had placed too much emphasis on the dovish Fed pivot and the global growth outperforming the US. Bets that may have been premature. So now with the VIX around 20s and also that we have even touched a near 1 year lows, expectations are building that the strategy of volatility may start to work again. Sorry, I have omitted that was a trader that paid 50 cents each for 100 call contracts worth 5 million bucks, betting that the CBOE volatility index will surge to 50 in May. So let's say a little tidbit. That's the one of the trader that have recently been known of betting on quite risky returns, risky in order to achieve, but who literally in the previous decade and in the beginning of yes, that was around 2013, as I remember correctly. He made a splash in the option market back then, and also has been betting bet for against some indexes. Right now, he looks like being back. Will he succeed in betting for VIX getting to 50? Oh my gosh, it's kind of an outstanding tip, but we'll definitely be watching this and watching this outcome with a high expectations of that it may go in that way. And so as I know, as I'm talking about that the recession might be kicking off very fiercely, but it may not maybe spark this year, but in May it may this correction may get much stronger. But in order to get VIX to 50, it will may need to converge with a much of a spooky data along the way. All right, so that was about the VIX. Right now, we have a possibly good year for stocks. Since 1950, stocks have had a positive return 1 year after the election every time, with an impressive average of almost 15%. So stock markets tend to be mostly indifferent about the results of US elections, and this data is near perfect example of this. At best, with split government, as we have right now between Democrats and Republicans, and the predictability that gridlock will be bring the market may be much more favoring for both. So related on the prior data, but zooming out further on the presidential cycle, we are also at a point where historic trends have been a tailwind for stocks. And under new presidents, markets have historically struggled in the second year, coming into midterms before seeing strong returns in the second half of the presidential cycle. And that's the chart worth studying. What about the crypto outlook? And right now we are switching as promised to our charts, and for Bitcoin at first. At Bitcoin, we have touched the ceiling of 25,000. That's also psychologically important. Sorry, I haven't switched it in time. It's also psychologically important barrier. So 25 should be respected for some time, especially after this type of movement that has probably squeezed some shorts. We may see possible hanging around this area for longer. For now, I don't expect having Bitcoin to backtrack to this 18 or even 16 levels, but we may find out what will be the reaction to this support at 20,000. Whether will we stop right around here or just move on the heightened volume back lower. For now, I do expect that Bitcoin to USDT, after forming this reversal candle, that's a very strong negating evening star, or inverted hammer if you wish. Right now we might be in a very much less favoring environment for bulls rather than for bears, and taking a short position from here after getting to 24.3 with a tight stop loss might not be a bad chance to grab some profit. But that's for advanced traders. So it was about Bitcoin technical chart. Right now, let's head on to some data from CryptoQuant. That's where we can find what the data underneath may be telling us. So at first, the miner outflow, we don't find any type of miner outflow right here, as right now no miners are finding that this is the rise that will be perfect for having an exit from the market. So the miners are much more um, biased towards that Bitcoin will have its much better time ahead, and they haven't used up this spike for its exit, at least to largest extent. It may that were some spikes, but not very visible. In terms of exchange reserve, all exchanges it spiked only a little, so we can find that the trust in this third parties entities has dropped, and right now finding its difficulties of reviving. What about the estimated leverage ratio? It's also grown a bit, but it's nowhere here from um, also recovering. So it's in a downtrend, so it means that the interest in the market is dropping for now. In a take a buy volume right now, this volume was satisfactory, but will it be enough to push it higher? It will be much more debatable. Net unrealized profit loss, we are recovering of this NUPL low congestion area, and right now finding its hike to higher level. MVRV ratio also is getting out of this recessionary box. Powell multiple as well, and open interest on Bitcoin is rising slowly but surely. The same for Ethereum. That's right now open interest have a little above its November's and December's highs, but still lower than September's and October's one. So we need just another type of justification of whether the bulls are here for longer, and for this one we need the Bitcoin price to stay above at least 20,000, maybe 19,000 will be the last stop for the bull. Otherwise, we might be heading back to 16,000 and maybe even lower along the way. All right, what about next element? I want you to show what's about the Binance. So Binance has been found as the one of the non-compliant regulatory entity of recent. That's why it sparked many doubts that it may even go through some financial troubles. Right now, however, the settlement discussions with US regulators are yet to take place, and even though the exchange has also faced calls for more transparency about its asset reserves and corporate structure, right now Binance has claimed that it has closed its regulatory gaps of recent. So they claim that they are already prepared for that oncoming regulatory wave, and that they will tackle it with a ease. So we'll find out how it manage. We know it's possibly greatly to the benefit of users, those all regulations, but we just want to put it behind us, right? We don't want already to have this regulatory compliance being eventually accomplished. That whole structure, that whole procedure will possibly lead to higher institutional interest, and I would be waiting for it, as I know many investors and traders don't want to invest on Bitcoin as they are afraid of such a regulatory law standard by FA. So maybe 2023 will be that year of a higher regulatory approach, and eventually will hopefully lead to not overregulation, but just over simplification. How maybe it's a much of a difficult to say, but I would expect that it may uh, it may follow through. What about the market movers? Let's find out. So for this one, I need you to head on to economic calendar, where we got it. Yes, economic calendar right now, finding out that on Wednesday we had retail sales. We've already discussed this. The PPI from US has found out been stronger, so it's also bring over some CPIs more dicey ratio next yet to be published. That's why the market has slumped. Building permits also has been around the forecast numbers, but still that's the something that's rather in the plateau than in a reverse. But we may find that after a longer plateau time, it might be reversal come. What we have on Friday, we already had retail sales from Great Britain that was much better than the forecast. So Great Britain may also avoid a recession this year, as many of data is coming over and are much better than the forecasts. Also, we have from US Fed bargain speech today at 8:30, so it's somewhere around the time of recording. So if you are interested into this event, you may Google it out, and the report will be already on the way. Otherwise, we'll let you know about this on Monday. So what about the earnings calendar? So this Wednesday, at first, let's find out. We had, for instance, Cisco. That Cisco Systems. We find out that shares has rose as much as around 10% in trading hours after it gave an upbeat revenue prediction that suggested that spending on tech infrastructure is holding up better than expected, and that's one of the very important tech names that the whole growth spectrum market investors are watching for. And this positive benchmark name is given a positive, much more positive outlook for the whole for tech industry. About the Thursday, we had applied materials, and surprised to the upside, whereas consensus CPS forecast was at 1.93. Was it anything? Datadog also was with a surprise, has found a surprise of 11.11% to the upside. So mainly those tech companies are pointing out that the worst might be over, or at least they are beating the market expectation that were betting for recession lately. On Friday, we still have some names ahead: Deere and Company, NatWest Group, and center point energy among the biggest. So we don't have many of strong names today, but if you are short, short horizon and low time intervals a trader, you may watch out for them as well. So as the last thing for today, I have for you, obviously, trade idea. So what we have, what I have for you is for today. Let's find out. I have for you a nut gas. So right now, nut gas is the one that has broken out of this long-lasting consolidation lasting since 3rd of February to 16th. But right now, undeniably, it has broken down and right now is heading lower. So what does it mean for you? You may watch out for another um, possible stoppage of around 2.27. But in my view, a much more interesting one, as it's not very strong support, will be this one of 2.09 bucks. So if you manage to catch any type of rebound, stronger rebound that may test out previous support, you may bet against a natural gas with an extension of at least 2.27, where there is a first resistance, or even with an objective of 2.07. So in my view, if natural gas will manage to get once again to the level of 2.40, as right now we are getting below this or even let me find out. So right now we are crossing through this market structure. That should be a rebound right here, as we have broken the market structure, and that's normally a rebound after this market structure being broken. So if we manage to get once again to 2.4, it might be a very decent bet against to an extension of 2.71. But if we won't manage to get to this area where I'm just putting this box within, I wouldn't suggest to having a that type of position on natural gas in the spectrum that I have appointed. So I do expect that natural gas may backtrack, but you need to be very cautious because we are in a strong downtrend move right now. So that's the opinion I have on the market right now, and it's the opportunity I have found recently. Always adjust your risk reward profile to the market conditions, and just wonder whether the market is going in the direction as you have appointed. So that's it in today's episode. If you have any questions, just put it in the comment section below the video, as always. And we are seeing each other on Monday, 8:45 a.m. East time. Thank you and